Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks, but also let's bring in our next guest, and that's for our cash tag segment. It's going to be Andy Swan, the co-founder of Likefolio. Welcome back to the show, Andy.
Hey, thanks.
All right, so we're talking Shopify. This used to be a high flyer. They did a stock split recently. The stock's down nearly 80%. It seems like the consumers, giving these corporations, a hit on the chin here a little bit. They're pulling back on a lot of spending. But what kind of data are you guys seeing out of Likefolio that that might signal maybe the end isn't near for the stock because it's just been pummeled?
Yeah, it's been pummeled, and this is one of the stocks that I come on here a lot and talk with you guys about companies that are good companies, but maybe Wall Street got way ahead of itself last year, and now those shareholders are really paying the price, despite the fact that the company, continues to grow. And I think that's the case with Shopify. This is a company that grew from 5,000 employees in 2019 to over 10,000 at the end of 2021. Now having to lay people off, and it just got ahead of itself. You can see it in the stock chart, but when we look at the underlying data, for Shopify, overall, it's a pretty good picture. Digital wallet mentions are up, so they have a macro trend behind them. More and more of commerce is moving in Shopify's direction. They have market-leading technology, and we are seeing some growth, and especially faster than its e-commerce peers. But the growth rate has slowed for Shopify, but it's still a positive growth rate. We're still seeing those consumer demand mentions above 2019 levels, and growing again faster than competitors like Amazon, eBay, and others. And so I think this is just one of those stories where you've got a good company, it is growing. Wall Street and the company itself got a little ahead of themselves during the massive shift that occurred during the COVID year, where everybody switched to digital transactions, and Shopify benefited from that a lot. It set this company up for unrealistic expectations in terms of growth rate. I think that's all kind of come together now. You got the stock down around $30. I think this is a point where if you're looking long term, you could start thinking about Shopify in a bullish perspective. But there's going to be a lot of volatility with this one, as you know. Any stock that moves down 80% over the course of a year obviously can move very, very quickly. And so you have to be careful with the way you enter it or your expectations for volatility moving forward. But overall, we like the company. We think it's better than peers, macro tailwind, but here we are with the stock significantly down because it just can't keep up with the comps that it established a couple of years ago.
Yeah, Andy, this is a story of baby and bathwater for sure in this name. Now, I'm not allowed to give opinions, but certainly you can. And when I look at the numbers where this stock started and where it's ended up, how about this? At peak, it traded 35 times sales. Now it trades 6 times sales. From 2015 to 21, annual growth rate, 68%. Now, obviously, significantly lower. Now, they do have some struggles, right? Some of their margins are starting to shrink as they keep investing in the business. But you mentioned growth, and it's still growing. It's not growing at the same rate it was. Growth has decelerated, but this stock has gotten caught up in the, if you're a growth name and if you're not profitable yet, you have just been absolutely destroyed. Andy, here's the question I want to ask you. Kind of similar to what you were already saying. This dismantling of growth stocks in this environment from last November to now, is this one of the key opportunities that people are missing in today's market?
Yeah, I really think that there are some real diamonds out there in growth and innovation. It's like, Kathy Wood has gotten pummeled for some of her approach and comments on innovation plays, but I think, you do have to separate somewhat the quality of the company from the performance of the stock. And sometimes, if you're willing to take a longer term view, these companies that are changing the way business operates or changing the way the world works can get caught up in both euphoria and an exaggerated level of fear. And I think we're starting to get into the exaggerated level of fear component of things. Like if you look at this, this chart from Likefolio shows consumer demand for Shopify's products is still growing, like you said, and still up versus 2019 levels. The stock is below 2019 levels because the growth rate has decelerated and because the cost of money has gotten a lot more expensive. But in terms of what the company's actually producing in terms of value, that has grown and gotten better. And so I think, yes, this is one of those companies that could be part of that conversation. I'm not saying it's the one example that I would put out there as the best example of baby thrown out with the bathwater, but at these prices, I do think it's worth a second look. The company already said this is going to be a transition year. It's turning out to be a transition year, and so be very interested in next month. I think it's October 27th. They report earnings. Let's see how that transition is going. Likefolio says it's going okay. The company's still growing, and hopefully there's some acceleration going into that. If we get that, then this is a real buy. I think a real bargain.
Yeah, and I think Shopify was one of the first retailers or fintech type companies that started laying people off. So maybe controlling their costs a little bit, Andy. But when you look at the partnerships that they have, I think that's the key for this company moving forward. They continue to expand that. They partner with Google, Alphabet. They partner with Meta, Twitter also on their Shop Now. Is that what lends credence to your your data points here that you guys are pretty positive on this stock?
Yeah, I think this is a company that does a very good job of getting in front of customers. It doesn't have to attract the customers to its own brand. It can work with other DTC brands, get in front of where the customer is, and make that shopping experience simpler, more effective, and hopefully even joyful. And I think that's their goal. That they do a pretty good job of that, and they're doing a better job of it than they were in 2019. The stock is lower, so let's see where this ends up. $30. I've started to really like it, but again, there's some serious risks still in this stock. And like you said in the last segment, just because something's down 80% doesn't mean it can't go down more. There's always 100% more you can go down from where you're at today. So I think this is one to be careful on, but overall, solid company that's doing some real good work on the backbone of the internet and payment systems.
Yeah, definitely. And the stock market, punishing people that aren't making cash right now. You've got some rising macro risks also. All right, great stuff as always, Andy. Appreciate it.
Yeah, thank you.
All right, that's Andy Swan, co-founder of Likefolio, helping